All right, today we are going to talk about power, real power, the kind that runs the global economy. And I'll tell you right now, it's not the stock market gurus you see yelling on TV. We're about to meet the real masters of the universe.
So let me ask you, when you picture Wall Street, who do you see? You probably think of the high-flying tech CEOs, right? Or those traders in the loud jackets, or maybe the founders ringing the opening bell at the stock exchange.
But what if I told you the real shot callers, the ones with the ultimate say, operate almost completely in the shadows, far, far away from the flashing lights of the stock market ticker?
Okay, let's just start with a number that is guaranteed to change how you see things. The global stock market, the one we hear about every single day, is worth a mind-boggling $100 trillion. Huge, right? Well, the bond market, it's worth $130 trillion. Yeah, let that sink in. The supposedly boring world of bonds is actually way, way bigger. And that size, that sheer scale, is our first clue as to where the real power is hiding.
So that brings up a pretty big question, doesn't it? If the bond market is the real giant in the room, why are we living in this Wall Street mirage where it feels like stocks are the only game in town?
Well, it's actually pretty simple. Stocks are exciting. They make for great stories. You know, the thrill of a hot new tech IPO, the dream of finding that one stock that goes up 10 times. It's all about high-stakes drama and incredible growth. But by focusing only on that, we are completely missing the people who are actually in the engine room, making sure the whole economic machine doesn't fall apart.
So let's do it. Let's pull back that curtain. It's time to meet the real power brokers, the quiet, unseen mechanics of the entire financial world.
This quote right here just nails it. Think about it like this. Shareholders or stock owners are the flashy designers and the public face of a big, fancy building. But the bond investors, they're the ones who designed and control the plumbing, the electricity, the foundation. You don't see them, but without them, the whole structure collapses. They control the flow of money itself.
Now, to really get their power, you have to understand one single crucial word: yield. That's it. All yield is the interest rate a company or even a government has to pay to borrow money. It is the fundamental price tag on money. And guess who sets that price? You got it, bond investors.
And because they set that price, they effectively have their hands on the economy's gas pedal and the brake. They decide when things speed up and when everything grinds to a halt.
So here's how they hit the gas. When bond investors are feeling optimistic, they rush in to lend money by buying bonds. That high demand pushes the price of bonds up. Now, here's the magic trick. When bond prices go up, their yields go down. It's like a seesaw. And with lower yields, it suddenly becomes super cheap for companies to borrow money, to build new factories, hire people, and expand. Boom! The economy gets a jolt of energy.
But they also have full control of the brake. If those same investors start getting nervous, maybe they don't like a company's strategy, or they're worried about the whole economy, they start demanding higher yields to compensate them for the extra risk. All of a sudden, borrowing money gets really expensive, and companies have no choice but to slam the brakes on their big plans and just try to save cash. And this power, it goes way beyond just companies. Bond investors can make or break entire nations. You just have to look at the European debt crisis. When bond investors lost confidence in countries like Greece, they demanded ridiculously high yields to lend them any money. Those borrowing costs exploded, basically paralyzing those governments and threatening the entire Eurozone. I mean, that is a level of influence that most shareholders can only dream of. So where does all this incredible power come from? Well, it all boils down to one simple, unshakable concept in finance: seniority. This is the golden rule, the law of the land. In the legal pecking order of any company, debt always comes before equity. The lenders, the bondholders, always get paid before the owners. End of story. And here's where that really matters. If a company goes bankrupt, think of it like a line to get paid from whatever's left. Who's at the very front of that line? The bondholders. They get their money first. Only after they are paid back in full can anyone else get a dime. And the regular shareholders, the people who own the stock, they are at the absolute back of the line, and usually they get nothing.
This spot at the front of the line completely changes their whole mindset. Because their main goal is just getting their money back, they become laser-focused on one thing: risk. They aren't trying to hit a home run. They are obsessed with making sure they don't lose their principal investment. It's all about survival.
So this fundamental difference creates two totally different worlds, two completely different ways of thinking. Which brings us to the final idea. Who are the real adults in the room?
Let's just put them side by side. Stock investors are often driven by stories, by hype, by the headlines. They're chasing that huge upside and reacting to every little quarterly earnings report. But bond investors, they are driven by deep, fundamental analysis and long-term risk. They couldn't care less about next quarter sales. They are asking a much bigger question. Will this company even be around in 30 years to pay me back my money?
And that brings us to this final quote, which just says it all. While the stock market is having a party, celebrating a good quarter, the bond investors are the ones in the corner, quietly asking the tough, sober questions. Is this sustainable? Is the foundation of this company actually strong? It's that cautious, long-term perspective that really sets the pace for the entire economy.
So from now on, when you see those big, flashy headlines about the stock market hitting a new high or a new low, I hope you'll pause for a second. I hope you'll look past all that noise and ask yourself the more important question, yeah, but what does the bond market think? Because that's where you'll find the real story.